皆さんこんにちは。ピクテジャパンの田中純平です。本日は弊社の新興国株式のファンドマネージャーでありますマーク・ボルトンと対談をしたいと思っております。Okay, so Mark, thank you very much for visiting Tokyo.
Nice to be here. Thank you.
Yes. Let's talk about emerging market equities. So we had a strong performance in emerging market equities year to date.
Yeah.
So what drove this market rally?
I think a number of things drove. The environment in terms of interest rates has been very conducive and helpful to emerging markets. Emerging markets always tend to do well when they see the peak in US interest rates coming. So that's been one principal kind of driver of emerging market equities this year. Another would be China. So I was in Hong Kong last week, and last time I was there was 18 months ago, and there was very much a downbeat feel. I think the Chinese market was the only market in the world that had not really had a bull run. And that has, of course, changed over the last 18 months and this year in China. So the Chinese market, has re-rated from a P of about 8 or 9 to a P of close to 13, 14. Amazing. And that's been one big driver, of emerging markets in general.
Was that due to DeepSeek?
Partly due to DeepSeek, yes. I think, AI has been the other big theme in emerging markets as well as developed markets. But you're right. I think DeepSeek news came out probably in February of this year, hard to remember. But until that point, there was a view that the US tech world was years ahead of China in terms of artificial intelligence. And DeepSeek really showed that that was not the case. That they were maybe months behind, one, and two, that they were able to use the technology and the sort of less powerful chips they had in a much more efficient way, more inference rather than training, etc., which meant that the whole Chinese tech ecosystem, if you like, suddenly looked very, very undervalued.
Right. And what about earning growth, generally speaking?
Yeah, well, you're right there. We know that emerging market equities valuations are trading at quite a substantial discount to developed markets, particularly the US. Those valuations are kind of justified on a historic basis, in that earnings per share annualized growth in the US for the last sort of 10, 12 years has been about 11%, very strong. Whereas actually emerging market earnings per share growth annualized has been closer to 2 or 3%. So there's that big gap there, but we think that sort of is changing and could stay positive for a while longer.
I think emerging market earnings are high next year. Is that right?
Yes, absolutely. One of the reasons we think for the rally this year and that the rally will continue is because emerging markets earnings growth is now above developed markets earnings growth for the first time in quite a long while. And we think emerging markets earnings growth could be between 14 and 15% over the next 12 months against more like 10 to 12% for developed markets.
Right. So what would be the best way to approach in equities in terms of style?
Well, we always favor high dividend yield stocks. And the reason is we think they are somewhat overlooked by the market. When we look at high dividend yield investing, we look at a total return approach. So we're looking at capital appreciation plus the dividend you're paid plus the reinvestment of that dividend. And actually, a company like Petrobras in Brazil is one example. If you're paying a dividend of like 10% a year regularly, you reinvest that dividend, the total return as an investor you get from that stock is really quite dramatic. And we think that's something that's overlooked by the market.
Right. Okay, got it. Thank you very much. So, which countries or sectors are you currently focusing on?
So there's been several sectors. Obviously, this year, kind of Korea has done extremely well. We've been well weighted in the high yield portfolio in Korea, and we think kind of value up and the program that's being unrolled there has further to go. And then there are specific pockets that are quite interesting around the world. One specific story we're looking at the moment is the Middle East, both Saudi and the UAE. Saudi have been talking about lifting their foreign ownership limits, which they will probably do next year. When Qatar did a similar thing in the last 18 months, the Qatari market outperformed by 50%.
Wow.
So we think there might be an opportunity in Saudi at some point next year. What's holding us back a little bit is a somewhat negative view in the short term on oil prices. But once we think that will maybe trough in Q1, Q2 next year, and after that, you know, the foreign ownership story will take the lead, if you like.
Right. Yeah, I think there's another themes in the Middle East that's sovereign AI. What do you think about that?
We think it'll be a driver, and you know, it's a good question because we're able to play the AI theme in our funds, in the high yield fund, through some of the Taiwanese technology names and the Korean memory names, which do have a yield that is sort of just enough for us. Stocks have been going up, so the yield has been coming down, but we still have some reasonable exposure in AI. And you're right, I think more and more sovereigns will want the AI and the data centers that control their data on their own soil, and that's a further driver in kind of demand overall.
Interesting. I think our viewers are particularly worried about China, especially banking sector. So could you please talk about that?
Yes, people always worry about China, and obviously the property market is I think entering its probably its 6th year now of downturn. That's good in a way, you know, downturns don't last forever, and we're 6 years through that now. So we probably are seeing some bottoming out in the Chinese property market. I mean, particularly in the secondary sale area, there's bottoming out, and in the tier 1 cities. But you're right, there's a lot of sort of hidden debt in the kind of property chain, I think, which is a worry for the banking side. However, you know, in our fund, we only invest, you know, principally in the larger state banks or the best private bank, China Merchants Bank. And for those, we think the debt situation is very manageable and can be worked through effectively. It was interesting to note during COVID that the Chinese banks were, you know, one of the few country banking systems in the world that paid dividends every year throughout COVID regularly. You know, you got your 8% from, you know, ICBC in 19, 20, 21, 22, 23, whereas in the UK, for example, the UK regulator said, no, we don't want our banks to pay anything. So if you were a bank shareholder there, you did far worse than if you'd been a bank shareholder in China, for example.
And what is the dividend yield for Chinese banking sector?
Yes, it's currently sort of 5-6%, something like that. I haven't looked at the Chinese 10-year, but probably around 1.8, 1.9%, something like that. Some people regard the Chinese state banks as almost being quasi-sovereign. They won't be allowed to go bust. So a yield of 6% is still quite an attractive yield, you know, if you're lending to the Chinese government at the moment. And one thing that we do think maybe is happening in order to try and help them cope with some of those bad debts and the credit, you know, losses that there are undoubtedly in the system, is that interest rates, short rates in China, are probably being kept higher than perhaps they could be with the deflation that's present in the economy. And maybe they're being kept a bit higher to give the banks that net interest margin cushion to allow them to, over time, rebuild the balance sheet somewhat.
And the exposure to the real estate sector is limited as well?
That's come down by quite a bit, yes. And as I say, being 5 years into the process, even the banking sector, each year you take a certain percentage that you can bear to take, and we are working our way through that backlog, I think, at the moment. Yeah.
Great, thank you. So could you please briefly give us a message to our viewers?
Yes, I think it's a good time to be investing in emerging market equities, definitely. As we've said, the sort of earnings differential between emerging market companies and developed market companies going forward, we think will be in emerging markets' favour and could stay that way for several years. So we think it's a lasting trend. That's partly supported by the fact that we see that inflation has really been conquered in emerging market equities. It amazed me that inflation in India in October was 0.25% year on year. I had to ask our Indian colleagues whether that was correct, because I felt it was such an extraordinary number. In Brazil, inflation will be 3.6% by year end. In South Africa, inflation is similar level. Real interest rates are high. A lot of the fiscal deficits is due to, that interest payments that have to be made. So immediately you get interest rate cuts, you get into a virtuous cycle of higher GDP growth, lower fiscal deficits, higher earnings per share. And I think it's particularly relative to the US and Europe at the moment, it's a very attractive place to look.
Thank you very much. ということで、日本語で、まとめさせていただきますと、新興国株が今年なぜパフォーマンスが良いのかについては、政策金利が引き下げられていますということに加えて、利益の成長率が、来年はですね、先進国株を上回る可能性が出てきたと。そして、バリエーションが依然として割安なんだということですね。で、この水準訂正のきっかけとなっていたのが、ディープシークの台頭だったということなんです。で、さらにですね、これ注目すべき国、セクターとしては、まずは中東サウジが挙げられておりまして、特に外国人投資家の規制が緩和される可能性が出てきたということが注目材料の一つ目。そして二つ目がですね、中国の銀行株。ここは何と言ってもですね、配当利回りが高い。しかも安定的に配当を出しているというところが魅力の一つであるということ。そして、警戒されております不動産市場の低迷による影響というのは限定的だということでした。そして最後ですね、3つ目につきましては、韓国の半導体セクター、特にメモリーですね。ここについては AI による恩恵を受けているということに加えてですね、今、コモディティ DRAM の需給が非常にタイトになっているということで、ここもですね、恩恵を受けてくる可能性が出てきたということで、韓国の半導体セクターが注目されるということでございました。Well, thank you very much for your insights. Very helpful.